U.S. jobs growth staged a bigger recovery than expected in April as businesses added 211,000 posts. Figures from the U.S. Department of Labor also showed the unemployment rate dropped slightly to 4.4%, compared with 4.5% in March. The rebound in the jobs market could pave the way for the U.S. Central Bank to raise interest rates in June. The economy needs to create 75,000 to 100,000 jobs a month to keep pace with growth in the working-age population. An unemployment rate of anything under 5% is considered to indicate full employment. The rate of 4.4% is the lowest since May 2007. The rise in employment was driven by the leisure and hospitality sectors, healthcare and social assistance, financial activities and mining. The report also showed average hourly earnings rose by 2.5% year-on-year, although this was down slightly on March's figure. Rate rises. The jobs figures represented a strong bounce back following the disappointing figures recorded in March, when only 79,000 jobs were created, said Cully Samra, UK Managing Director at Charles Schwab. With the Fed hitting the pause button in May, the recovery in today's employment data gives weight to the prospect of a further rate hike in June and the possibility of 2 or 3 more this year, he added. Recent GDP figures showed the U.S. economy grew at an annual rate of 0.7% in the first 3 months of this year, the slowest rate since the first quarter of 2014, raising concerns that the economy could be weakening. Earlier this week, the Federal Reserve kept its key interest rate on hold in a range of 0.75% to 1%. However, Central Bank also said it viewed the slowing in growth during the first quarter as likely to be transitory and still expected economic activity to expand at a moderate pace. This jobs report bolsters that interpretation, with gains across industries, even in sectors such as retail, which struggled earlier in the year, according to Gus Foucher, chief economist for PNC Financial Services. That's an indication that the economy is expanding at a steady clip in early 2017, he said. With unemployment as low as it is, firms may have a harder time hiring and job growth could slow by the end of the year, Mr. Foucher said. But, he added, that's not a sign of weakness in the U.S. economy. It was a sharp bounce back after a very weak labor market performance in March. The average job growth for the year so far has been 185,000, essentially the same as in 2016. Certainly the April jobs figures look consistent with the idea that the slowdown in U.S. economic growth in the first 3 months of the year was transitory, a view expressed by policymakers at the U.S. Federal Reserve earlier this week. If the evidence continues to support that view, then we can expect the Fed to raise interest rates again at meeting next month. That's certainly what the financial markets expect. And they are always right, aren't they? The U.S. job market rebounded strongly last month and the unemployment rate fell to the lowest level seen in a decade, government data released Friday morning showed, calming fears about the state of the economy that had bubbled up in the past month. Employers added 211,000 jobs in April as the unemployment rate ticked down to 4.4%, the lowest level since May 2007. Average hourly earnings rose by 2.5% from the previous year to $26.19, slightly slower growth than was seen in previous months. The American job machine returned to form in April, James Marple, senior economist at TD Economics, wrote in an email to clients. The re-acceleration in jobs should assuage fears that economic growth is slowing in any meaningful way. Job gains were seen in mining and manufacturing, sectors that are relatively small but have been closely watched due to the Trump administration's vows to boost employment in the industries. But the bulk of the job gains made in April came from the much larger sectors of leisure and hospitality, education and health, and business services. In addition to the drop in the headline unemployment rate, which measures people who are actively looking for work but unable to find it, Broader measures of unemployment and underemployment continue to improve. The U6 rate, a broader measure of underemployment that includes those who have given up looking for work and who are part-time but would like to be full-time, fell to 8.6% in the month, the lowest level seen since 2007. Stock markets largely shrugged off the news, with the blue-chip Dow Jones Industrial Average dipping slightly and the broader Standard & Poor's 500 index inching up as of mid-morning. The job market was widely expected to rebound in April following a disappointing figure in March and a surprisingly high reading in February. Employers added only 79,000 jobs in March, due partly to a snowstorm that weighed on economic activity, revised figures released by the government on Friday showed. But the month before, the second warmest February on record, the economy added a total of 232,000 jobs as warmer weather helped to buoy activity in the construction industry. Following lower job growth in March, federal economists also reported that the U.S. economy expanded at its slowest pace in 3 years in the first quarter, a figure attributed to persistent measurement issues. The Federal Reserve cited the slowdown in its decision Wednesday to leave its influential interest rate unchanged, though it said that slower first-quarter growth was likely to be transitory. The stronger reading for the jobs market and the larger-than-expected drop in the unemployment rate could help reassure Fed about further rate hikes this year. On Friday morning after the jobs report was released, futures markets pointed to a 78.5% chance that central bank officials would lift interest rates when they next meet in June. A rate hike in June is more likely than not, Kurt Long, chief economist at the National Association of Federally Insured Credit Unions, wrote Friday. Yet some economists noted that the progress in the economy still does not appear to be translating into big wage increases for workers, something that many had expected by now. As the economy expands and more people who want jobs are able to find them, employers should have to compete more to find talented people, which should translate into rising wages. But average hourly earnings rose just 2.5% on an annualized basis, down from higher gains in February and March. 200,000 for jobs growth is just such a huge number. You'd think we'd get to a point where employers have to raise wages, and we're still not seeing it, said Tara Sinclair, an economist at George Washington University. That may point to lingering issues with the economy. Some economists argue that wages remain so low because gains in productivity, an all-important measure of how much a given worker or machine can produce, have been sluggish in recent years. It weighs on potential growth. It weighs on growth in living standards, says Jeremy Lawson, an economist at Standard Life Investment. It sends a signal to Congress and to the Trump administration that the real problem that needs to be solved is America's productivity problem. You need a set of policies that can lift potential growth. And that's not really in the offing at the moment. Elise Gould, an economist at the Economic Policy Institute, also cautioned policymakers to remember groups that have been left behind. In April, the unemployment rate sat at 3.8% among whites and 3.2% among Asians, but 7.9% among African Americans and 5.2% among Hispanics. None of those rates changed from the month before. Younger people also continued to graduate into a weaker economy than the U.S. saw in the 2000s, says Gould.U.S. Job growth rebounded sharply in April and the unemployment rate dropped to a near 10-year low of 4.4%, signs of a tightening labor market that could seal the case for an interest rate increase next month despite moderate wage growth. Non-farm payrolls jumped by 211,000 jobs last month, the Labor Department said on Friday, well above the monthly average of 185,000 for this year and a jump from the gain of 79,000 in March. Job gains were driven by a surge in hiring in the leisure and hospitality sector as well as business and professional services. The drop of 0.1 percentage point in the unemployment rate took it to its lowest level since May 2007. The decline reflected both an increase in hiring and people leaving the labor force. The labor force participation rate, or the share of working-age Americans who are employed or at least looking for a job, fell to 62.9% from an 11-month high of 63%. The rebound in hiring supports the Federal Reserve's contention that the pedestrian 0.7% annualized economic growth pace in the first quarter was likely transitory, and its optimism that economic activity would expand at a moderate pace. The Fed on Wednesday kept its benchmark overnight interest rate unchanged and said it expected labor market conditions would strengthen somewhat further. The U.S. Central Bank raised its overnight interest rate by 0.25 percentage point in March and has forecast 2 more increases this year. Average hourly earnings rose 7 cents, or 0.3%, last month, partly because of a calendar quirk. While that lowered the year-on-year increase to 2.5%, the lowest since August 2016, there are signs that wage growth is accelerating as labor market slack diminishes. A government report last week showed private sector wages recorded their biggest gain in 10 years in the first quarter. The economy needs to create 75,000 to 100,000 jobs per month to keep up with growth in the working-age population. Job growth averaged 178,000 per month in the first quarter. With the labor market expected to hit a level consistent with full employment this year, payroll gains could slow amid growing anecdotal evidence that firms are struggling to find qualified workers. Construction payrolls rose 5,000 last month and manufacturing employment advanced by 6,000 jobs. Leisure and hospitality payrolls jumped by 55,000 in April. Professional and business services payrolls rose by 39,000. Retail payrolls gained 6,300 after 2 straight months of declines. Retailers including JCPenney Incorporated, Macy's Incorporated and Abercrombie & Fitch have announced thousands of layoffs as they shift toward online sales and scale back on brick-and-mortar operations. Government payrolls jumped 17,000 last month. Other labor market measures also showed strength last month. A broad measure of unemployment, which includes people who want to work but have given up searching and those working part-time because they cannot find full-time employment, dropped to 8.6% from 8.9% in March. The employment-to-population ratio rose 0.1 percentage point to a fresh 8-year high of 60.2%.